Well, earnings out this morning from Yum Brands signaled cheaper meals are king with consumers under pressure. Yum Brands bet and won big on aggressive promotions and limited time offers at Taco Bell in the US, boosting net sales during the quarter. Now, the deals helped pull in budget-strapped consumers searching for those cheaper dining options. Joining us now with more on the state of Yum Brands' consumer is Yahoo Finance's Brooke DiPalma. Hey, Brooke.
Good morning, Rochelle. Well, value promotions continue to be the name of the game for Yum Brands as they navigate the pressures like those return of student loan payments in the U.S. environment. And CEO David Gibbs did say on the call that he believes that Yum Brands franchisees are navigating those pressures better than others in the industry. He also added that Taco Bell continues to be a bright spot for Yum Brands. As you noted, we did see U.S. sales for Taco Bell grow 8% year over year. He also added that value purchases remained in the range of the brand's intended 10% mix target. And on the call, CEO David Gibbs weighed in on how exactly it's benefiting in this environment.
If we break down the Taco Bell stores in the United States by income demographic, we see really consistent 2 to 3% transaction growth across all income levels. So our stores in lower income trade areas are performing well with good transaction growth, just like our stores in high income trade areas. I think that speaks to the way Taco Bell can play value with things like the $5 box, and how also in a pressured consumer environment, we're probably benefiting a little bit from some trade down in those higher income trade areas.
And for the remainder of the year, the company does expect that its results will land well above its long-term growth algorithm for the year, including achieving low double-digit core operating profit growth. In Q3, that core operating profit grew at 16%, led by KFC International, as well as Taco Bell US. But once again, CEO David Gibbs said that they continue to put up strong results. They're seeing plenty of demand, and they think they're demonstrating that they can thrive in any environment.
And Brooke, of course, I have to ask you about whether Yum Brands mentioned any concerns around weight loss drugs impacting consumer habits, something that we've seen sort of starting to come up after that Walmart report tied what they saw with some of their pharmacy customers, then instead sort of paring back on some of these higher fat and, some of these more fun foods that aren't always great for our waistlines.
Right, Rochelle. Well, this is something that you and I have talked about so much over the last month or so, and we continue to hear that it's too early to tell. But there was actually no mention of GLPs. They're also known as weight loss drugs on the Yum Brands call this morning. There was some questions about it in analyst notes of whether or not it would come up. But we did hear from Stifel analyst Chris O'Cull in a note saying that restaurants like Taco Bell could be hit by the impact of these weight loss drugs, since they are considered snacking companies. People go there during the afternoon or late night hours. We could see a dip in traffic there. But once again, we know that the current U.S. population who are on these drugs is only about 1%. Goldman Sachs does project that we could see as many as 15 million people use these weight loss drugs by 2030. But no mention on the Yum Brands call of a potential impact from these weight loss drugs. And once again, Rochelle, we continue to hear that it's too early to tell from Wall Street.
Indeed. Still early days here. As you mentioned, only 1% at the moment, so we'll have to keep track of that. Our very own Brooke DiPalma, thank you as always.